Welcome to our 9th episode of Your Money Life Coach on eRadio with me, Barbara Mandel. This is your weekly Wednesday inspiration to act and manage your money better. Today we'll be discussing why we pay tax and the different types of taxes we pay. Next week Wednesday, our Finance Minister, Mr. Tito Mboweni, will deliver his budget speech. The budget speech usually gives us an indication of the taxes we will pay for the tax year that starts in March and ends in February every year. We also get an indication of the proposals government wants to make to our tax laws to improve our tax collection or increase the taxes that's already in place. The budget affects every citizen because we pay tax on just about everything we buy and every time we travel. There is a social contract between the citizens and the government, whereby the citizens have a responsibility to pay tax, for which they in turn have the right to education, quality healthcare, a functional government, and the infrastructure, to name a few. Government has a responsibility to deliver these services from the taxes paid. The government uses SARS as their collection agents to implement the various tax laws and collect money for the state. Things that are often of interest in a budget, especially to people like ratings agencies and economists, are the debt levels of government, the budget deficit, in other words, the shortfall government has between its income and its expenditure, and what government are planning to spend their taxes on. Government must also find a very fine line between the taxes they levy to be able to fund government's operations and the economic impact of these taxes. If taxes levied are too high, the economy will grow at a slower pace, meaning government will have a bigger deficit as they will have less taxes coming from companies, and if there is a rise in unemployment, less individuals that pay tax. There are two types of taxes that affect the majority of individuals in South Africa, namely direct and indirect taxes. Direct taxes are the taxes that are paid via our earnings, like for example PAYE, that gets deducted off your salary every single month. There are also provisional and assessed taxes. A common myth is that provisional tax and PAYE is a separate tax, whereas it is in fact one tax. The collection is simply done differently. Collectively, it's known as personal income tax and forms a portion of your assessed tax that you pay upfront to SARS. Once a year, in filing season that usually starts from July or August, you have to submit a tax return declaring all your income and claim all the allowable tax deductions. Your taxable income is then used to determine the amount of taxes that you should have paid given your income and expenses. Where the taxes, your PAYE and or provisional tax, that you paid exceeds the amount that is due to SARS, you will have a tax refund that SARS will pay to you. Where you have a shortfall of tax, SARS generally gives you until January of the following year to pay it. Other types of direct taxes are estate duty that is levied on the value of your estate, donations tax, and capital gains tax. Capital gains tax is levied on the assets you sold during a particular tax year, where you have made a capital profit, like for example the sale of your house or shares. There are certain exemptions and some exclusions to ensure that the capital gains tax does not deter investors to invest in our country. Indirect taxes are added to things that we spend our after-tax money on. These include things like VAT, that is applicable to every purchase you make from a VAT vendor, fuel levies that's levied on every litre of fuel you buy, and excise taxes that is levied on your alcohol and tobacco purchases. These are also known as sin taxes. The aim of these taxes is to help spread the country's tax burden across all citizens. To protect the poor, certain food and other necessary items to survive is taxed at a zero rate. This includes things like brown bread, maize meal, and sanitary pads. To protect local companies and manufacturers, government also levies import taxes. The tax year difference between types of products and certain industries. Certain products are subject to a higher import tax so that the local businesses can compete against the low-cost imports into the South African marketplace. Government also uses different tax incentives to promote certain of government's objectives. One such example is the tax deduction you get from contributing to a retirement fund, and another, to get the nation saving, was the introduction of tax-free savings accounts. These initiatives helps government to encourage the public to save for their retirement and enhance the savings culture with reward as a tax break. Tax planning is usually complex and there are no two things more certain like death and taxes. It is important for you to take note of what will be said in the budget speech and seek advice if you are unsure on how to optimally structure your tax affairs. That's it for me today. Be sure to tune in next week Wednesday, 3:20 here on eRadio. If you found this episode valuable, remember that all our episodes are available as a podcast on the eRadio website to share with others. Feel free to follow me on Facebook, Your Money Life Coach, for more tips on how to manage your money better, or you can visit our website at www.yourmoneylifecoach.co.za. Thanks for listening.